Nothing in this video should be taken as financial advice. Bull markets are great, but they breed complacency. Bear markets can be energizing. Instead of fretting over the decline in your net worth, think opportunistically about all those bargains and the potential gains when inevitably a bull market returns.
Same time, we also work with the guidelines of that's currently there. And so I take Ripplenet as an example, our cross-border payments network. One of the first things we did with the members of Ripplenet was actually work out and say, there's a lot of friction here of moving value from one country to another. How do we help reduce that friction? How do we reduce that cost? And that cost comes from a multitude of different areas. Settlement risk is one that was called out, I think, in the questions. And yes, a bridge asset like XRP can help reduce settlement risk and reduce some of the cost.
He's talking about the Global Payment Steering Group, and in 2016, Ripple put out a press release in conjunction with Bank of America, Santander, UniCredit, Standard Chartered, Westpac, Royal Bank of Canada, as well as some players from DTCC, which, if you're unaware, DTCC is like the Fed, but up the stock market. They control all stocks that are out there. So I don't own a stock. DTCC owns the stock. So Donald Donahue said the creation of the Global Payment Steering Group is significant because this represents the first time that major banks have formulated policies to govern the transfer of money across borders using blockchain.
But it's the operational cost, it's the operational friction, it's the compliance. And so what we did was work with our members. We defined a rule book that all participants of the network signed up to. That created a framework for what was a finality of settlement when you settle between two parties on the ledger. We also created a standard that preceded really the G20 and FSB work on looking at harmonizing the data sets for cross-border payments, because we were seeing all of our parties all had differing regulation. They all had, I think, Tom, to your point, they all had an application of it. But when you try to do a cross-border payment, as an example, they all wanted slightly different information.
ISO 222 is becoming the standard. It's probably already the standard now. So Ripple started that standard. They created the rule book. That was the Global Payment Steering Group, Ripplenet, and they created the rules on what needs to happen for a payment to happen, and then they had data. So what do they do with the data? They created the ISO 222 standard, which is now being accepted by everybody. So ISO just took the data that you need for a payment and put it into one standard that everybody can use regardless of your geography. Before this, there were Swift MT messages. That was not from the private sector. The private sector came up with ISO standards, and ISO standards are in everything: manufacturing, supply chains, even toys have ISO standards. And that comes from the private sector. And it helps standardize the entire industry onto the same format. So the information that they send is always in the exact same format. This is great for artificial intelligence, machine learning, any of the CRM programs. They take in this information and it's all ready to go.
So we see the next evolution of this, and I'm kind of giving you a very broad brushstroke of how we sort of see things. We see this next innovation of creating this fundamental infrastructure, these platforms that enable new use cases to be built on top of. So when we talk about real world assets, or essentially converting traditional mechanisms and applying them to DLT based solutions, it's how do we help that innovation? And most of it requires a connection of multiple things, maybe a settlement token, maybe an asset token that defines the asset, that has the rules of the road around it. So you can't do one without thinking about it in its whole. And so that's at the heart of everything we're doing here, is to work with regulators. And just to point on the conversation about the divergence, I think we actually see a kind of counter. We see a lot of convergence around defining some common principles and actually setting some boundaries and some guidelines for participants to leverage the technology and to build new business lines. I think there's one or two outlier countries that are still struggling to sort of cohesively form an opinion on it.
Yes, we haven't heard much recently from North Korea. A couple of things emerged there. One is that this is actually going to be a very long run development. We need to be looking at decades rather than weeks and months. And secondly, the future is really not going to be about bored apes everywhere. Where do you see, Anthony, the
timelines? Some are going to be protracted. I agree, it's definitely not weeks and months, but actually, I think it's small numbers of years of these. But actually, I think it's small numbers of years of these. But actually, I think it's small numbers of years of these.
Crypto lives on the internet. When developers are working, when projects are working together, they meet on Zoom, they move as quickly as possible, 24/7, 365 days a year. This layer of the internet is being built while the internet exists. You know, you can compare this to the dot-com bubble. The problem is that the dot-com problem didn't have the internet. So the next layer of the internet of value, any problem that you throw its way, there's a solution that's being built up. We've gone from zero knowledge proofs, identity, scaling, every single thing that you can think of, there's developers working on that right now, and then they collaborate and put their pieces together like Legos. At the same time, you had Ripple dealing with the incumbents, lobbying, building with the incumbents, building Ripplenet, right? Bank of America, the Global Payment Steering Group, that was the initial rules of Ripplenet. So they had the feedback of the experts with experts within the banking industry, and they did build this platform that's using fiat and also has the capability of using XRP. So you ask yourself, when is XRP being used? Well, I would argue that it's being used now. It's just how much liquidity can XRP handle? And that's why Ripple is pushing for AMMs now.
Because of changing US regulation, Basel, again, what are some of the changes that you'll have to go through?
Well, the most significant thing with Basel and what's going on in the United States is a proposal to significantly increase capital requirements for the largest banks that, I will say somewhat bizarrely, is a response to problems that happened with regional banks in March. We believe that it is an unwarranted proposed increase, and not only because it causes us to have to hold more capital, but we believe it really will have a material impact on the amount of lending that U.S. companies can do generally, which is not a good thing when the economy is in more or less a precarious position, even though remarkably resilient. And it also pushes more activity, lending, and financial intermediation out of the banking system and into non-banks. And we don't think that's a good thing. We don't think it's a necessary thing. Our banks, our largest banks, including Citi, are very strong from a safety and soundness perspective in terms of capital levels, liquidity levels, and this is just unwarranted to have this huge excess amount of capital.
The new Basel requirements are clamping down on the banks. And this is what I've been talking about all along about the capital requirements with stable coins, right? You over-collateralize a stable coin. You collateralize it with more debt. That's treasuries. So what Circle is doing is a huge, huge benefit to the government. The government gets to print money, and those are treasuries, and Circle grabs the treasuries and puts it into a token, and that's USDC. So these capital requirements, the banks were getting away with 7% per token, or not even, sometimes lower than that. But right now, I'll just say 7%. So they got to back a token with 7%. Now these capital requirements are raising the bar higher and higher. That means that they have to eat up the debt that the government's printing. So they're making it harder and harder for banks. And if you know anything about TA, just look at some of the bank's charts. I mean, everything looks like it's about to implode. Nothing looks bullish. Everything's back down to its 2008 levels. This looks like a very, very bad situation for the banks. So like I've been preaching on my channel, there are no outs. This system comes to an end, period. Before it comes to an end, there's going to be strange things that happen, like what he just said. The capital requirements get to a bar where you can't even do business as a bank because it's not worth being in business. Think about that. That's what the government does. It puts up these barriers where you can't even be in business because you need to be a mega bank to do this. So that's where we usher in central bank digital currencies, or we've got, a few banks to issue stable coins, whatever they're going to do. This is a symptom of that. So pay attention.
All the companies here are happy to do whatever regulators require. And they may set a really high bar and we will meet it. And that'll be fine. The challenge we are going to have on the other side is, actually all three of our companies were relatively small just 10 years ago in the landscape of things. And we're now big enough that we can afford some of this. But if we aren't careful, we're going to knock out the innovators. And there's going to be new innovators, right? Every company goes through this. So we need to apply new rules rather than the existing rules. And this is difficult because sometimes regulators hear this and they think that you don't want to obey the rules. That's not the truth. That's not what I'm trying to say. What I'm trying to say is the existing rules will by definition, by having the surveillance, by having the teams required just to get started, prevent new innovation from happening.
The markets are forward-looking, and the markets have determined which projects are going to be here for the long run. And Ripple is one of those projects. It's over $1 billion market cap. XRP's market cap is a multi-billion-dollar market cap, and they own something like 48 billion XRP. So they're not going away unless crypto goes away. And whatever rules get thrown at the crypto world, there's going to be a few key players that are able to adapt to anything because they have the resources to adapt to it. But when I talk to smaller projects that are creating cooler and cooler things, they don't have such an easy time with capital. I mean, Ripple is able to throw large parties. It was able to host huge events. That doesn't happen with every crypto project. A lot of crypto projects have tight budgets, and they have developers that donate their time, and that's how the projects get started and moving.
Consistency and joined up thinking around this. So again, calls for standards and governance and global cooperation is also critical here. Otherwise, we end up with walled gardens. I don't know any more than that at this stage, other than we're talking to a whole host of different industry participants who are all looking at how could tokenization and this underlying technology benefit their industry.
Every industry is going to be impacted by blockchain technology. This is going to significantly impact the world, the economy, every single aspect of everybody's life. This is going to change. People are not realizing the impact that a value or a trust layer of the internet will have. But it has immense impact. And this is just getting started. You're just starting to see what the potential is. The real innovation, the real outside of the box thinking hasn't even occurred yet. We're just linearly moving forward. And those abstractions of things that come, those inventions are going to take it to the next level and the next level and the next level. We have just started.
Again, I cite back to the sort of late 90s. We didn't know what the internet would do for us then. We kind of had an idea. I think if I look at it first and foremost, the XRP ledger and the CBDC ledger was designed first and foremost to be a payments rail, essentially.
The last leg of a bull market always ends in hysteria. The last leg of a bear market always ends in panic. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon. My Patreon, we have weekly chats about the markets.